everyone. I am Julia Cordova, and welcome to the Place Your Trades Network. Today we have a great show for you. I'm going to tell you what I wish I knew when I was a new trader. I have a very special guest. His name is Sam. He is BugHumbled on Twitter. He's a great follow, by the way. And today's broadcast is brought to you by Crudele, which has built a custom app dedicated to trading CME Group event contracts. That's what we're all using at Place Your Trades. Use the link right next to this video to check out the Crudele web app for free. If you're a subscriber to our site and you open a Crudele account before March 1st, you will have a chance to win a bunch of prizes in the months ahead. One of those giveaways will be a trip to Las Vegas, where you will join the Place Your Trades team at the Money Show in April. So be sure to share this page with your friends so that they too will have a chance to join us in Vegas. We're going to Vegas, guys. I figured, what I haven't done in a while is just talk about what I wish that I knew when I started trading, because there's a lot of advice out there and a lot of it sounds good. A lot of it, you're like, well, okay, but that doesn't apply to me kind of thing, right? So today what we're going to do is I put together the 10 things that I wish I had known. Okay, so this is what I consider to be the most important skill set for any trader. Consistency is the difference to me of whether you're a hobbyist, whether you're just going in there, I heard this from my friend, I'm going to go make this trade, or whether or not you truly want to do this for a living, or if you want to use trading as an additional source of income. You have to show over time that you can be consistent. It's not about catching that one huge trade. How many times have you heard people that won big and then they just couldn't replicate that success going forward? The reality is, if you want to do this for a living, it just takes time to prove to yourself that you can be consistent.
You see so many things out there where people are promising that, oh, look at this big trade, or whatever, but you don't know their whole track record.
Exactly.
I've signed up for services before, and the guys talk a really smart game, and then you can't get any sort of details on their track record. And by the time you're going in and actually placing all the trades, it's, oh, well, we're slightly underperforming the market. Well, that's no good. So.
Right. Next on our list, this is my favorite. Know where you'll be wrong. I cannot tell you how my inbox fills up with people that say, I bought this at this price. It's now here. What do I do? And I always ask, and I don't want to be a jerk, but I always ask, well, what was your plan when you bought it? And often there wasn't a plan. There was just, well, my plan was for it to go up. That was my plan. I'm like, well, your plan went wrong then. I used to talk about, people ask me, how do you know where support is? It's probably where my stop is. Especially when you're a new trader. One thing I would suggest is, if you make a trade plan, you say, okay, I'm going to get it in here, I'm going to sell here, I'm going to get out here, is to scale into the trade. So that what you're really doing is you're thinking to yourself, how are the market makers going to try and screw me? Put in a scale where you want to, and then have a plan to add right before you would get to your stop, right? And that gives you a little bit more wiggle room. It makes your stop go a little bit down below where it might have been. But it also, I think, will increase your chances of winning.
Oh, yeah, completely. I mean, we'll get to this in a bit, but it also helps you on the risk management side of things.
Yes.
Because in doing that, you have to understand how much you're risking in a given trade. And one of the things I've found is, over time, if there's a pattern that's obvious enough that as a newbie trader, it just stands out to you, everyone's probably seeing that, and you're probably on the wrong side of the boat. So giving yourself some wiggle room is definitely helpful there.
All right. Uncertainty is your friend. So I see a lot on Twitter where there's tribes of people, right? When you're a new trader, the thing that you want most is certainty.
Yeah. I mean, I think the whole idea of trading is you're going to be wrong a certain percentage of the time. And so not getting married to your views is really helpful in order to remain profitable, get consistent, that sort of thing. If everyone agreed and everyone knew that the price was going to be X on a certain day, no one would be willing to take the other side of the trade, and we would all be out of a job. So.
Right. Okay. So don't trade desperate. This is like, if you want to think about your dating in the past or whatever. It's like the more desperate you are for whatever it is that you want, the less likely it is to come to you. And the same thing for trading. And if you do take a big loss for whatever reason, just take some time away and think to yourself, okay, why did that happen? How did that happen? How can I prevent that thing from happening to me again?
I've found that when I've taken a big loss and, I'm revenge trading, I'm like getting very emotional about it. That's when I'm most likely to break rules that I've put in place in order to avoid big losses or have really big drawdowns. A lot of times the best thing you can do is just walk away from the screen, just get your mind off trading.
So when in doubt, zoom out. I'm zoom out so that I'm not looking at what's happening in the day. Sometimes I'm looking at the weekly, sometimes I'm looking at the monthly. If I am taking a counter trend trade, then I'll trade smaller than if I'm taking a trade that is within the larger trend. You can give yourself a little more wiggle room when you're with the trend versus against the trend. And then again, depending on whatever time frame that you're looking at. Sam, I know you look at the 5 minute because we talk about it all day long in the chat.
Oh, yeah. I mean, I think the saying is the trend is your friend, what you always hear around trading. I've found that certain patterns, I find that they work a lot better on a given time frame if the trend is going in the right direction for, the 5 minutes and the hourly and the daily. And if all of those are heading up, then I've found that those bullish patterns will also tend to work out a lot better. Some of the biggest losses I've had is when the ES is just ripping down and I keep trying to catch the bottom, knowing that it is going straight down for the day.
Exactly. I actually make a rule about that. If I get cut twice trying to do something counter trend, there's no third time to get cut because I get in like a downward spiral. I know my personality. I'm very intense. I'm very focused and I'll just keep doing it. And just the losses add up, even if you try to keep them small. So
that's that revenge trading, Julia.
Yeah, exactly. So it's important in my opinion to set those rules that if you either if you lose a certain amount per day or if you try a certain amount of times or both, then you know what? You're done for the day. So keep it simple. Okay. So I remember when I first started trading, I thought I was a rock star. I set up, I think it was 6 to 12 indicators that I thought were really good. I looked at each of them individually. I set them all up. I had no idea what the heck I was doing. And the more indicators I looked at, the more confused I got. Now, you see, when I post a chart, I use price action and RSI. And will I look at some other things if somebody else points them out? Yes, I will. Somebody said the other day, you could always find an indicator that tells you you're right, even if you're wrong. When you start trading, you can have that many indicators. People are successful doing that. But I would just recommend going very slowly when you're adding things to your trading.
I've got like 1 or 2 strategies right now. It's weird. It's almost like dating in the sense that the longer you spend time with a given strategy, the more you kind of learn about it and how it behaves and like the little nuances of it. But it seems like at least I've made the most progress when I've really focused on one and tried to understand it in a lot of different environments.
I love this one too. You don't need to spend a lot of money up front learning. A lot is available on YouTube. I used to do a YouTube video every week where I would cover something. And I know a lot of people said that they learned from that. I used investing.com, which was free to do my charting even because it was free and because I actually liked the data quite a lot. You don't need to have the professional version of everything out of the gate. You can sort of take time and understand from a free perspective what is out there before you make a decision on what to spend money on. Okay, risk management. I was lucky to have been successful in my prior career. So I had a pretty large trading account to begin with. I didn't think this applied to me. I thought I didn't need to start small because I had done so well investing before. I was like, risk management, what's that? That's for people who aren't smart, right? That's what I thought. And the reality is though, the smarter you are, it can actually be a disadvantage for you because you will think that you could outsmart the market when you in fact cannot. Like Tom Canfield said, or Candy says, like, just be dumb. It's like, be as dumb as possible when you're doing this. It's only after you've gotten it that you knew that you got it. If you think you're about to get it, you're probably still further than you think. One of the things that I like about these event contracts in particular is they're cheap. I don't have an options background. I don't know. I did not know a strangle from a straddle from a strip club. I had no idea what was going on, but I can learn. And these things are like $1, you know, I can learn and figure out what's going on with just these cheapy little contracts as opposed to much more expensive ones from my regular broker.
Oh yeah, definitely. You should know ahead of time how much you're risking in any given trade. And if that means not moving your stop, then you're keeping your stop there. I try not to risk more than 1 to 5% of my account on any given trade.
I love it. Okay, number 9, turn off the noise. I used to watch CNBC, Bloomberg. I used to have everything on. I used to pay attention when news feeds come out. I'm like, oh, this pharma is going to buy this biotech. Let me buy the biotech stock. And then I would be up for like a minute and then I would be like really down. The reality is the less noise you have interfering with you, the better. I know some people don't even look at Twitter during the day. They don't want to get influenced by somebody. They don't want to see. They know what's happening from what's happening on their screen.
Turning off the noise is really helpful to be able to concentrate on your setup, the one thing that you're looking for in order to place a trade.
Last one, number 10, know your enemy. I mean, I can't count the number of times where people, again, are tribalistic and they think that the person who's on the opposite side of their trade is their enemy. No, that's actually the person that's funding you. You are your own worst enemy. You're not competing with anybody but yourself. You have to understand your own psychological demons so that you can conquer them. Just focus on yourself, focus on your own time frame, and be supportive of other people.
Yeah, and I think this gets back to the benefits of journaling, because one of my mentors told me that the longer you do this, the more you're going to realize it's not you against the market, it's you against yourself.
Yes.
And I think journaling is really helpful for understanding the emotions you're going through when you potentially could be revenge trading, when you're getting way too greedy, things like that. Really being able to recognize that it's very much an inward journey, I've found has been very helpful.
That is my 10 things I wish that I could go back in time and yell at myself to pay attention to myself. So with that said, I am going to, I already did take a bunch of the yeses. Anthony's going to be mad at me because I maxed out my account again. I can't help it. I'm a little bit degenerate.
Risk management, Julia. What happened to that?
I know, because it's a small account.
No, it's fair.
I know, it's true. Do as I say, not as I do. Follow BugHumbled.
There you go.
I know. Okay, BugHumbled over there.
Yeah.
He's a good friend of mine. I really appreciate you. Follow Place Your Trades on Twitter. And we'll see you on the flip side. Okay, bye, everybody.
Bye, guys.